we've seen the market run up quite nicely over the past week. What are you making of the current momentum and the force that's behind it?
I think it's much expected. We've had, in the previous week, the CBN announced that there will be about 4 M&As announced over the next couple of weeks within the banking sector. I think that was really, really positive for the market. And having oversold over the last 2 weeks, I think it was normal for investors to come back and keep buying equities. But to respond to your question with respect to, how this could play out, in terms of strength over the next coming weeks, I think that it could slow down over the next couple of weeks. I think over the wider market, we're not in a very bullish state yet. But I think that once we get some announcements from the banks in the coming weeks, that would obviously drive it a lot more stronger, probably into the coming year.
Of course, for now, there's a lot of hype around the potential listing of Dangote Cement. It was supposed to have been listed by Friday, but that now being postponed to next week, Tuesday. Safe to assume that we're looking at a market that's pretty excited about this listing for the most part.
Well, it's going to be a pretty big issue. We're talking about $13.5 billion here. That would make it one of the most capitalized cement companies in the world. So we're happy it's happening down here in Nigeria. We probably wouldn't see all that listing happen just at once in Nigeria because we're talking about 25% of total market cap here. Upon listing, probably around 15%, but it is quite sizable. In the medium term, we see catalysts such as liquidity, because they're only going to be offering about 100 million units to the market. And I think also there is some value on the table as well that investors we'll see.
Before we tap into that investment merit, I came across a blog on Dangote Cement and this listing yesterday, and I'm going to read it directly, saying, as a young investor, I lost my money on the Nigerian stock market, and so I've lost interest. It will be hard for me to admire and appreciate an idea behind any IPO, as these ideas are all lies and an avenue for management to enrich themselves. Of course, we don't have everyone very positive about this coming to the fore. What kind of buy-in do you see from the local investment community, given the fact that many have been burnt through the down cycle?
I think the larger investing public is really bullish on this issue. Everybody's excited. The pension funds, who as of yet can invest, but they're currently lobbying the PENCOM to make sure that they can also participate in the issue. With respect to retail investors, which I reckon you've basically focused on. I think there's still some cynicism there and a pessimism. The retail market as a whole hasn't come back yet to the equity market. They've been burned quite badly in 2008, and I think in general that's the sense you get across companies, not just IPOs, but also just trading the market generally. But I think that the issue is quite big. Yes, it is true that DIL, that's the Dangote Industries, will make a lot of money off this issue, but I think investors also stand to make a lot of money. It is Sub-Saharan Africa's largest cement company with an installed capacity of 20 million tons. It is also one of the world's most efficient cement plants. We're talking of EBITDA margins here in excess of 65%, sustainable over a 5-year period, and I think that obviously is worth considering outside talks about relatively high valuation. With respect to the value that this company presents, I think that it is worth buying at its current price. At
135 Naira, right?
That is correct.
Okay, perfect. Well, let's take a look at anticipated impact on activities, because, as you highlighted earlier, the merger would account for about 25% of the entire market cap. What impact do you see this having on the day-to-day performance of the NSE itself?
Well, naturally, we expect that as the stock moves, any movement in the stock will also impact the overall NSE movement, particularly because there will be tracker index funds tracking this stock, and also the banks as well. But I think, broadly speaking, I think it is good that we're having Dangote Cement list. I say that because what it does is that it provides a hedge against a downward movements in the banking sector, which we've seen over the last 3 or more years. So what I mean is that when we see a downward cycle in the banking sector, for example, And we have investors being quite bullish on non-financials like the cement names that would obviously compensate for losses in the banking sector and put the NSE index overall on a pretty good standing.
Another player that you've got your eye on is Flour Mills of Nigeria. This is a company that will be doing a debt deal pretty soon, looking to raise roughly 33 billion naira to help with not only expansion but also the refinancing of its existing debt. What are you making of that move?
I think it's good they're coming to raise money. It's something we've seen across board, across our consumer universe. Consumer companies are just looking to expand their existing capacity. Flour Mills is Nigeria's largest flour miller. It wants to be a dominant player within the food segment, and so it's coming to raise more debt capital to finance this expansion, part of which is a new sugar refinery which will have a capacity of about 700,000 tons. But with respect to timing, I'm sure they could have come out much earlier where they would have been able to raise debt around about 10% or probably lower, making them more competitive relative to their peers. So now that they're coming at this time, we're talking about probably north of 13%, which it's still okay, given current level, the rates at which they borrow money today from creditors. But I think more importantly, they will get the financing, long-term financing they need for a long-term business.
Looking at that diversification strategy that it does have in the pipeline, I mean, is this the right strategy to be employing now? That's that's a question on some investors' minds at this stage, where we've got many companies globally downsizing in order to focus on their core operations.
Well, what is core to Flour Mills of Nigeria today is its flour business. That represents a sizable chunk of Central, almost 60%. They plan to continue to focus on that business. So some of that debt financing will go towards expanding and also making its flour milling equipment more efficient. But diversification is also important. In that respect, I'd like to note that given the global situation in wheat prices, if wheat prices were to increase aggressively over the next couple of weeks or months, of our flour miller universe, this is inclusive of Dangote flour, Honeywell flour, and also Flour Mills. Flour Mills will be the least affected because it's got that diversification. So it is quite important, I think, within a sub-Saharan African context. Diversification, by the way, isn't, I'd say, trimming to core business isn't a focus for sub-Saharan African business at this point. You must remember that they weren't really affected by the global downturn. We're only seeing that mainly in more developed markets.